Good afternoon, traders. It's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen, and euro dollar. So last week, at the very start of my video, said I'm going to sit my hands most likely for the previous week. I had concerns that the dollar could do both directions. I highlighted what I thought was more likely than the other. What I thought was more likely definitely failed. But because I didn't trade, because I had that gut instinct, you could say, where I say to people, look, just sit in your hands. This is where you want to wait and see for the next couple of weeks. I had the correct instinct to do so. So as an experienced trader, you often at times will understand when to do that. That only comes with experience, and my experience saved me some money last week. So going on to this week, what I've done on the DXY, I've just drawn in extended the trend line from last week. So you can still see an upward channel pattern here at the moment. We can still move down, but what has happened last week, the reason why the dollar increased and the yen increased in value so much was purely because you had problems in Turkey and the euro. So what happened was the European investors got out of the euro and moved their money into dollars and yen. Ironically enough, gold did not get affected by this when normally it does. So it shows you it's only for me, I feel it's only a short-term problem because gold actually devalued in price, even though it's a safe haven. The dollar and the yen increased in value, and they are safe havens, and they moved for a safe haven reason. So for me, I don't see this bullish dollar actually being so strong right now. It doesn't make that much sense when you think like people change into another fiat currency and not gold. It to me says it's a little bit more shorter term than longer term, but we'll just manage to trade what we see at the moment. So like I said, on the daily chart, we've got the upward sloping channel here. I just extended the trend line from last week pretty much. That's all there is. I haven't really got a bias at the moment. I wouldn't want to buy now. I wouldn't want to sell now either. I don't like the dollar as it is at the moment. Other pairs look like it could move back down. Bear in mind, it's rallied up nicely, got in a pattern and carried on rallying up nicely. So you could still, if you was long the dollar from when I first went long in March, April time this year, there's still good trades to keep open, managed with nice risk management and stop placements. But for the moment, as new trades, I'm still going to sit my hand again. I want to see some structure. I want to see some pullback to value. Because I don't want to buy, let's put it this way, if you can buy Mercedes, a £50,000 Mercedes at £40,000, I'd rather do that. I don't believe here is the best price to buy right now, but we'll wait and see what happens. So on Aussie dollar, the Australian dollar has moved down quite a lot itself in general. And you're going to have to excuse my very, very slow internet today because I'm actually working from home and we've got all the kids using their internet they have, and this isn't the greatest internet line there is now. So I did say to you, if it breaks above 75, it will most likely go to 77. The day 50 capped it. This bearish engulfing candle here wasn't the greatest in the world, but you see here the amount of volume in this candle here to move down lower, that clearly says to me that it's now broken down. There'll be some form of pullback to test this area. I wouldn't be surprised if we move down lower now to start with and then come back up to test. So if you get a little move, something like this, nothing obviously too massive, and come back up, that means we're testing the zone here. We'll test daily 50, test the key level, and test the trend line. That there would be a nice little short position to take, and you can manage it however you manage your trades. That is what I'll be looking for. And again, you can clearly see the next level down would be here somewhere. That would be let's put 71.7. There we go. Zoom out 717 from these two positions here, and we should see when it uploads the data in a minute what else there is to see. Bit mess there, but it has been rejected. But definitely these two rejections here. Here will be your third one. If you was to sell from this point here, that would be my key goal. Something like that, little 1.5% or something like that, 1.7%, something similar to that. I'd be looking for, but this may happen the next couple of weeks or so. So you have to just wait and see what happens. I wouldn't want to sell now, but this isn't the way I trade. Obviously, I mean, some of you do trade the breakouts, and if you do trade the breakout, the 1-to-1 would get you around this area anyway. So the 1-to-1 for this pattern distance, just to give an example. If you do that to, well, there you go, yeah. So the 1-to-1 there puts you below this key level anyway. So if you do trade breakouts, then your 1-to-1 pattern distance is within the key levels as well. So there is something there for you guys to trade. On a weekly perspective, you can see that all the dojis have now been broken to the downside quite nicely. So yeah, I would suggest that we are in another bearish move lower again. We haven't got the pullback we expected to value on this pair as such. I know this was the best candle to take it on, but it never happened for us, so hey, we leave that one alone. We will. Euro dollar, very contentious, and you can see now we broke down quite nicely here on the weekly perspective. Good bearish engulfing candle. Clearly the bear trend is going to continue down. Now obviously I still believe there is some pullback to value, and we just got to pop in the 1.14 level in, and you'll see that we are right at the key level now already. Let's just get that up. There we are, guys. So that level there is a nice key level. You can see it at multiple rejections all the way through 2015, 2016, 2017. So yeah, I would definitely put that down as a area of interest. When we come down to the lower time frames on the daily chart for this as well, I've already marked in 1.14 again, and you can see on a daily perspective how this level has been respected quite nicely over and over again. So again, I'd be expecting a pullback to value now. We did get a little test, I said, like last week on the triangle here. Not the greatest pullback in the world, but definitely the one-to-one pattern distance did work. It has played out, and you notice here the actual volume on this bearish engulfing candle here is super high volume, which means the bear move has been confirmed, which does give me confidence to start selling the euro and moving forward. Like I said, this 1.14 area, 1, 2, 3, 4, 5, 6, 7, 8, loads of touching 1.14. So no surprise, once again we're here, and we just stopped dead at this level. So we'll now be picking up what's happening. If you come down to the lower time frames on euro dollar, to give you some perspective, we've now got high volume on dojis here at the bottom. 1.14 is a little bit above us here. Obviously that's the 1.14 area there. Sorry guys, on the roll, analysing it as we go bit by bit. Let me just pause the video while we wait for it to upload. On the 4-hour chart, you can see a little zone as well here. So you've got it, that little zone there, that channel there, and you can see we're in the zone already. We are. So to me, this is a zone of interest. You can definitely see that it's kissed a couple of times between 13.5 and 14. And so when we come back here, you can definitely see now we are around that area. And also, if you just want to now zoom in properly to this area, you can see that S1 is right at 13.5. So don't be surprised we see him test of 13.5. I would still expect some form of pullback. The 4-hour 50 would be a very nice trade to take short from. The reason why we can now establish that we broke the triangle, break and retest, come back down. Good volume down as well. I expect some low volume pullbacks up here. If you just put the trend line in like that as well, you now got a place for your stop. We can delete that line there for the moment. So if price came back up to test here, for example, you can definitely get a trade, maybe something like that in place. Nice little one-to-one there. That'd be what I'd be looking for short-term trading. I wouldn't want to buy here just yet. Although if you did buy here, you definitely, if you did buy there, put your stop like that. You'd have to do that, and you have to trail your stop bit by bit. For me, that's not the greatest trade in the world. I think you're clutching at straws there, but you know, if you're a short-term trader, that might be something you might want to look for. Now, pound yen, I said last week that the intraday shows you a bear market. I did say to you, sit in your hands and wait to see what happens with the dojis and everything else, and wait for confirmation. And what happened last week was this. We had this little doji here, but it's low volume. Now, that's not a high volume rejection as what you saw here, where this one's a high volume rejection. And these two candles here, we point out as high volume as well. So the fact it's low volume says to me that the market, the institutions were not buying then. The institutions just sat in their hands. It broke down and they started selling again and again and again. And you can see at the bottom here, they had a high volume day there. To me, this is now a little bit exhausted now. It looks as though it's got to where I want to go. This is obviously Monday now today, so we're just going to see what happens. We can definitely see 1.4 being the key level though, so don't be surprised if it just moves down, just touches the 140 level, sorry. That's what I expect it to do, and then it really should put some decent volume in to actually start showing that the institutions are now getting out their short positions. So I'm quite happy with that decision there as well, I did say to you. And to confirm on the lower time frames with pound yen what had happened, if you give me a moment. Okay guys, so last week, yeah, I said this bearish engulfing candle with decent volume was kind of bearish still. As we broke down, we then started getting some super high volume carrying in, some bearish candles carrying in with high volume, and that's what's happened here. And as you can see now, again, we've got little dojis forming a high volume now. So this, to me personally, looks like institutional traders are starting to get out their trades now, starting to take their profit. And I would not be surprised now for this week if pound yen does move further up now to actually give you some value to sell again. So anything around this area here could be a good trade short. But obviously it does depend on the higher time frame as well. Personally myself, I'd like to move up to 144 area, so then you can actually get a decent trade short again you could from this. So something like this here, something like that, and again target the bottom there. You could get a trade like that in place. You could. That's a nice decent stop really, in all fairness. I know it's 120 pip stop, but you need to look at how these markets move, and at the moment they're quite vicious. There's lots of wicks involved, and you don't want to be stopped out on a random wick for no reason whatsoever. So yeah, that's what I'll be looking out for this week. So, like I said, so I'm waiting for the dollar to pull back to value to give us better value. I do believe the safe havens will devalue again. I don't think it's going to be a permanent structure. So this week, just play it safe. Just take the best trades you know you take, and just be careful because this market is going to be a little bit bit of a ride it is for you guys. Okay, take care, and I'll speak to you soon.